Yeah. Yep. The question is, would you put a stop in order for this one day that, what do you mean? I'm sorry. The question is, would you put the stop order? Oh, no, intraday, no. The question is, would you put the stop order in for this one day? You'd put the stop order in intraday. It would just be there, stay there. Okay? Right. Until, right. You know, for those, the ideal stop, I mentioned before that one should place their stop before the trade is initiated. We'll look a little bit more about trading psychology in a couple of minutes, because that, when we most objective about the market, before we're in the trade, right? The best traders, and unfortunately most of us are not going to be able to do this, don't put in stops. They have mental stops, because they want to be able to pull the trigger on the trade. This is especially for intraday traders. They want to be able to pull the trigger and watch the market. But to be able to do that is a wonderful psychological asset. You know, to be unemotional, say, okay, I'm wrong, get out. Most of us are not going to be able to do it. We're going to second guess ourselves. So for just a blanket statement, always place your stop in before you do the trade. Yes?
Whenever I trade on an intraday basis, sometimes I have experienced a spike by the auto desk. Mm-hmm. Sometimes I got wiped out, no matter how many, I have leverage on the stop level. So usually intraday, I don't set up the stop. Okay. But I set up the limits. Okay. The limit, the entry limit, the buy and sell entry limit? Yes. Okay. So and then once I enter, and I'll repeat the question. Go ahead. Okay. Once I entered in a position, mm-hmm. and I determined how much I'm going to have a limit, but I didn't put down the stop. Stop. Okay. And you watch how the market reacts? Well, and then most of the time I lose. Okay. Most of the time. All right. What he was saying, what Young was saying, is he'll put a trade on, but then he won't have a stop in there. He'll be watching the market, but most of the time he loses. Okay. Nothing wrong with putting a trade on and then saying, okay, I'm going to watch it and see how the market acts to see if I'm going to be out of the trade or not. The advantage of that, again, as market circumstances change, we can adjust our stop. The downside with that is if you don't have a stop beforehand, how do you get your risk reward? You can't, right? You can't get your risk reward. Even if it's a preliminary stop, I think you should do that, because this way at least you're defining your risk. You can change the stop later on, and we'll look at some slides later about adjusting stops. Yes?
I don't think you can have a stop in before you do a trade, but the trade's got to be existing before you put a stop in.
Right.
Otherwise, it's a new position.
Okay. He's saying the trade has to be existing before you put the stop in. But what you do is you set up the reasons for the trade. Bullish and shooting star. Okay. I'm going to sell in the shooting star. The shooting star came before you pull the trigger on selling short on that shooting star. You say, I'm selling the shooting star. My target is here and my risk is here. So you've defined your risk and reward before you put the trade on. And then you put the trade on, and whatever happens, happens. If you get stopped out, you're out.
First, you have to do the trade.
Right. But before you do the trade, you have to define what your stop and your risk is. Sure. Right.
But actually, what Anthony said is that it is possible to set up the stop mm-hmm. before you have any position, because you place an order at the stop level, right, and then you enter the trade.
You have to enter the trade first, right? You have to enter the trade first, right? But you should know in your mind what the stop is going to be. Yes, okay. Right. Yes. I'm sorry. What were you saying? Right.
Higher level charts,
mm-hmm.
and you see it's close. Like, let's say this.
Oh yeah, right.
Let's say it is 20 pips away from
mm-hmm.
From where we calculated here. So me going to 14 pips stop means I'm asking for cover.
What he's saying is, if there's another chart, maybe a higher level chart that has resistance instead of what did I say? 14 pips higher, 10 pips higher, definitely. You should always look at where support and resistance areas are. And even if you trade intraday, you always have to look at a daily chart. We'll look at an example of this later on, because if you don't, you're really asking for trouble. And we'll look at this when we get to intraday. Okay. Indicators, the more the better. And this is that grouping of indicators, or confluence of indicators. It could be a group of candlestick signals, one confirming the other, or it could be a candlestick signal confirming a Western signal. And this is one of my trading principles. Okay, the more signals we have joining together, the more likely a reversal. So here we have a hammer and a piercing pattern. But while this is what I call a confluence of candles, a grouping of candles, this would not be a good risk-reward. We'd have to wait for a breakout above the resistance area. And I think we saw the slide before. See the hammer? By the time you got the signal. Okay. Here we have a bullish engulfing pattern confirming a hammer.